The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call. I just wanted to pass a compliment to you. Taking a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes. And last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. Material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Anything like that. This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
And welcome to the August 21st, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I hope everyone out there had a wonderful Wednesday. I know I did. And let's make sure that you and I, that we do everything we can to have one heck of a terrific Thursday. I'll do all that I can do during the next couple hours to show you some terrific and extraordinary tools that help us to identify where price is headed to. We'll utilize that A to B equals CD pattern. We'll look at Fibonacci expansions and retracements. We'll look at candlestick charting and every other tool that we can get our hands on that'll help us to understand what price movements are going on inside of the markets. And, of course, this is a interactive show. That means it's a call-in talk show. We'd love to hear from you. You can always reach out to us, 877-927-6648. Toll free. You can also give us a call internationally at 727-445-1044. And you and I, we can go looking for bulls and bears. Before we begin our day, we should always remember that the benefit of the flowers that we love out there, well, for the benefit of the flowers, I think is really what I should say, right? We've got to water the thorns too. Something to think about. It is Terrific Thursday. This is Steve Rhodes. This is TFNN, and welcome to the show. Right now, we've got Dow futures up 28 points. They're trading out at 16,977. S&P futures up 2 points, trading out at 1985. NASDAQ up 2 points, trading out at 4041. Goldilocks, we're going to go take a look at gold first. It's off $18. Silver down 13 pennies. She's trading at 19.36. Light sweet crude off 17 cents right now, trade out at 93.32. No real movement here in the currency market. The U.S. dollar index is up 1 penny. It's trading at 82.29. A quick peek across the globe. We'll see that the DAX in Germany is trading up 44 points, about 0.5%. FTSE up 11, trading up about 0.2% out there. Mixed bag in Asia last night. We had the Nikkei up 131 points, the Hang Seng off 165, the Shanghai, how about that? Also the Shanghai down 10 points off about 0.4%. But let's start off our day by taking a look at gold. Let's look at a couple of different time frames, some charts out here. Give me a moment. We'll just switch tabs out here. There we go. Now, yesterday, I think we looked at the weekly. We looked at the daily. We're going to do the same thing here right now. If we take a look at the weekly chart, you can see if you're watching this on Tiger TV, what you are looking at is asking you to look at the yellow diagonal lines on my screen, a little rising price channel out there. If you're listening on the radio or your mobile device at tfnn.mobi, thanks so much for doing that. What we're looking at here is we're identifying the bottom of price utilizing the body of the candle. So I'm using the body of the candle here, the close from December the 16th. That close, by the way, is at 12:05.70. We can use the close of the candle session on May 26th. That price level is at 12:43. We can use the open of the session on June 9th out there as well. That's at 12:53. Well, we can see here so far today in gold's move lower, as prices moved right into the bottom of that rising price channel out there. This is a weekly chart that we're looking at, right? Week doesn't end till tomorrow. It can pierce through it just as it has done December 16th, the week of December 23rd, the week of December 30th. They even saw a little bit of a close to a piercing on May 22nd, May 26th, I should say, as well as June 2nd. So tomorrow, this is when this chart really comes to play, is tomorrow. But nonetheless, we can see prices up against an important level of support. If this level fails, what you're looking at is likely at least an A to B equals CD, the downside of 1194 out there. So this is going to be an important line of demarcation as we take a look at the weekly chart. If it breaks that area, does price have to stop at 1194? Absolutely not. That's just your 1-to-1 A to B equals CD to the downside. And gold typically likes to stretch its rubber band. That brings 1152. That brings 1099. That brings all of those A to B equals CD expansion numbers into play. But first, we have to watch to see what gold does as it deals with the bottom of this rising price channel. So that's what's going on the weekly time frame out there. Also, gold below its a TAS market profile low out there. Not a good scene. If we take a look at the daily chart here, I'm just simply going to show you these two different trend lines that have contained, in essence, the price of gold. You can come back to the time period of August 28th, 2013. You can use that as your first touch point. I was a little liberal here in my trend line, and then I drew the next area as being the touch point of July 10th high out there. So that level really has not been broken. If you look at the downside, the bottom of the rising little trend line, you're looking at the December 31st level. So I'm using that, and I'm using really the touch points over 3 or 4 trading sessions, quite frankly. And that is May 30th, June 2nd, 3rd, 4th, 5th out there. And you can see now from a trend line standpoint. So before we were using the bottle. How about that? We were using the bottom. We're using the body of price out there on the weekly charts. Now we're using a little trend line here. That's why we get to switch it up just a little bit. So you can see price with regard to gold down at an important level of support. Now, this is a daily chart. So the daily chart is going to perhaps give us a piece of information before the weekly, because you break this trend line, and then that A to B equals CD. If we take a look at the same A to B equals CD, I believe, inside the weekly chart, you're looking at the high out here on March the 17th. Your low down around the June 3rd area. That would be your B point, your C point right up here, July 10th. That gives us that 1194-ish level. So a break of this trend line, and that is very likely what we will see take place inside of gold out here. Now, below its market profile low as well, I have mentioned to you several times, each Friday, the CFTC puts out the Commitment of Traders data. You can just type in CFTC space COT, and it'll take you to the website out there. And last week, the data is as of Tuesday, and really what they do is they break it down into 3 categories of groups of traders. The large group, one area to watch, what's referred to as the commercial traders, the smart money, supposedly. And I believe that it is. It's the big money that's out there. It's the big tanker ships. And the big tanker ships, through last Tuesday, they had upped their net short interest in gold. So they smell something is going on out there. Now, that could be mines that are selling forward their futures as well. That's going to impact it. Nonetheless, they were ramping it up as prices were moving a bit lower out there. So they're suggesting we're going to see a big thump. And that would be nice out there, because I think that sets up a nice buy. We'll hear that the move in gold is over, what have you. Does it have to happen? No. But it is something to absolutely be paying attention to out here. And if we see these trend lines and channel lines being broke, then you know you've got the wind at your back is with the big money out there. It's also broken down into the next report, the next group that you really want to pay attention to, if you look at that data, in my opinion, is the non-reportable group. And that's made up of individual traders like yourself and myself. And we tend to stay at a party a bit too long. Once you get to a party, you like to stay there for a while. And so when that gets lopsided, oftentimes they're on the opposite side of the boat. out as the large commercial traders out there. And then that gives you some kind of nice confirmation. Now, I didn't really pay attention to the non-reportable group inside of gold and or silver out here at this stage. The information come from gold and silver is good enough for me to suggest that that they want to be able to push prices lower out there. And that is what's going on inside of gold. If we take a look at silver out here, let's really do the same thing. Let's just take a look and see what silver is selling into, off about 15 cents as we speak right now. And let's look at the weekly chart out here. Now, inside the weekly chart, you don't really have the same type of pattern as far as on a weekly chart, any kind of rising price channel out here. If anything, all we really have inside silver is a consolidation pattern that has been in since November 4th, 2013, with the top of that consolidation being $22.29. The bottom of the consolidation being right to where it is likely trading to right now, which is the December 30th low, which is about $18.95. Now, let me just see here. Let me switch over to the daily chart here real quick and see where we are at with regard to the retracements of silver out here. See if we have dipped below the 0.786 retracement, because if we have, that's really what gives us the clue. Now we have not dipped below the 0.786 retracement out there. That number is well, let me pull this back just a bit out here. We'll widen it up. We'll pull it back. There you go. So you got 19.29, and the actual low today, 19.28. Okay, so the 0.786 level has been hit. But does that mean that you would buy it here? Well, my response to that would be no. I mean, you might dig down into a 120-minute chart time frame or something, but you'd really like to see some kind of reversal signal that would take place inside silver. And I can't tell you whether that will take place today or not. It doesn't look like it will to me as I take a look at it, but anything can happen. Now, a break below 19.29, a close below 19.29, that's what really says, hey, we're going to come all the way back down to the bottom, May 30th. That price point, that swing level is 18.65, and that would be your likely next target. No real A to B equals CD to the downside that you can draw of any significance out there. I suppose if you were going to draw one right off of the top here on the daily chart, you'd use that high from July 10th. You'd have to use the low from July 16th, and then you'd take the retracement up into July 18th. The 1 to 2 A to B equals CD. Oftentimes where you see a reversal of fortune out here, where you're changing the marketplace, well, prices really traveled to that level as we speak right now. 1932 is the number of the 1 to 2 A to B equals CD to the downside. But at this stage, because of that nice move to the downside, I'm not really looking at the A to B equals CD patterns here as anything of significance to utilize. Instead, we'll just take a look at the retracement level. So that's what's going on inside of gold and silver. With regard to the futures markets, the indices, where things are headed to, everything is still long and strong. So when we get back from our first break, what we're going to do is we're going to take a look at, step back in time. We're going to start taking a look at the longer-term charts and then move our way forward. We'll probably start with the, well, not with the Dow. We'll start with the, we'll start with the New York Stock Exchange. We'll start with the monthly chart for the New York Stock Exchange. Get an idea of where price is likely headed to. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's go check in on the monthly charts. You know, there's 7 days left in the trading session, month, I should say. That includes today as well. Let's go peek in at some of the monthly charts, look at the weekly charts, get a feel for where we're at. So what I'm showing you right now on Tiger TV, I'm showing you a picture of the New York Stock Exchange, right? So we got the wider swath of the market out here. And we know about the New York Stock Exchange. What we should know about the New York Stock Exchange is that it broke out over its October 2007 highs out here, which is basically a 6,200-point consolidation range that it had been traveling in. Broke out over those highs here the month of, what is this? Looks like February of 2014. Now, when you break above a consolidation, the measured move over time is equal to or greater than the consolidation. That says the projected price for the New York Stock Exchange over time is $16,500. What else do we know about the New York Stock Exchange? Well, at an A to B equals CD pattern to the upside. The one-to-one price projection, 10,951. That level was fulfilled. It was fulfilled here during the month of June. And then in the month of July, and it was really July 31st. It was all about July 31st. One stinking rotten day out there when the markets move lower. Now, I believe the news behind that had to do something with Ukraine, Russia, the shooting down of the jet, something along those lines. I don't remember exactly. Doesn't really matter, because what really took place during the month of July out here was what is referred to as a key reversal session. It was a bearish engulfing candle as well. On a monthly basis, what you can see here, if you look look at the bottom of my screen, you're seeing that we're in the oversold level of the relative strength indicator. You're up in that 70 range. And when you get a reversal signal up there, it's something to be aware of. Now, the New York Stock Exchange, if you look back over the history of the New York Stock Exchange, you don't see that many key reversal sessions. That's how hard it is for it to form. It was doing that as it got to the fifth wave of a Chapman wave peak out there. We should have seen follow through to the downside this month. Now, there are 7 days left in the trading session, and absolutely anything can happen. But if we take a look at the piece of information that we have right now, is that just simply that hasn't taken place. There was no follow-through. In fact, if we go ahead and we blend a few candles together, that bearish engulfing from last month, it vanishes. It vaporizes out there. So if it vaporizes, where's the next move inside the New York Stock Exchange? Folks, so long as the New York Stock Exchange stays above 10,387.17, yes, even with the pennies out there, the likely next move inside the New York Stock Exchange is up to the 1 to 1.272 level. That's 12,185. That is the message of the monthly chart for the wider swath of the marketplace out there. By the way, no divergent patterns I should point out. There was a divergent pattern here, price relative strength, divergent pattern back here in May of 2014, but that went away. And these are only warning signals. That's unlike the top that we saw back here in 2007. Because when that top was made in October 2007, what you had was a bearish engulfing candle. You had some additional follow-through the very next month. You had a price relative strength divergent top out there. You had everything that was necessary in order to say that the market was getting ready to at least retrace at that stage. Once you got this crossover of moving averages, a lagging indicator, it was a sign to not be on the long side of the trade. We're not even anywhere near that here in the monthly chart. We never really got near that level in the monthly chart last month as well. So that July 31st date, it is at this stage here, it is sayonara, baby. Now, that's what's going on the monthly chart. It's important to understand where we're at from a long-term perspective. If we take a look at the weekly chart out here, the weekly chart for the New York Stock Exchange, I don't see anything. I don't really see anything here. Yeah, I see resistance. So on a weekly chart, your resistance is going to be the high from July 4th, the week of July 4th. That level out there is 1105.85 out there. But other than that, even from the moving average piece of the scenario out here, we never saw a bearish crossover, and therefore no reason here, no price relative strength divergent pattern, no nothing like that, no real indication that price wants to move lower on the weekly chart for the New York Stock Exchange. If we take a look at the NASDAQ Composite. NASDAQ Composite, as you know, we're trading inside the March 2000 swing point on a monthly basis. We've been trading inside it ever since the time frame of June of this year. And that says when you get inside a swing point, volume or not, you want to go up and test the highs. So long as we end the month here, the month of August, above 43.55.69. What does that say? That says that the highs out here from 2000 ought to be tested. That price level 51.32.52. The 1 to 1.618, A to B equals CD to the upside. Hey, that takes you to 49.23. There is this price relative strength divergent pattern that it means we're making higher highs with less relative strength. But there's no reversal signal out here. In fact, there hasn't been a reversal signal inside the composite, basically all the way up off of the last low out here from October of 2011. Amazing. 877-927-6648. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 24 points, trading out at 17,004. S&P up 2, traded 1988. NASDAQ Composite up a couple points, trading out at 45.29. Russell 2000 not out of the gate yet. It is flat, trading 11.57. NDX up 3 points. New York Stock Exchange up 13. Gold back about $18 right now. Silver down 11 pennies. Jumping to the upside out here. Looks like at Chipotle Mexican Grill. CMG is a ticker symbol, up about $16 right now. I don't see any news behind the move, but gapping up this morning, up above resistance of its market profile out there. It is not an exhaustion gap out there, so you got Chipotle up $16. Actavis, ACT is a ticker symbol, up a couple of bucks this morning. We've got Children's Place Inc., PLCE, is a ticker symbol, up 4% out here. Looks like they're out with numbers generating revenues or net sales of $384 million versus $382. So a little flat there. Net loss of $10 million versus a loss of $23 million. So they've been able to pare that back, and that is jumping somehow on that news. Hormel Foods out there. Nothing like a little Hormel chili on a cold, wintry day, and put that on a hot dog, some onions, sauteed onions, by the way, and some mustard out there. Nothing like a little Coney Island sandwich. Hey, Hormel is off to the races here this morning. Wide price spread, Looks like we've got some accelerated volume. They generated $2.28 billion in revenues, up from $2.16 billion on the prior third quarter. Net income, where is the net income? I don't see the net. I see a net income, $138 million versus $113 out there. Let's go check in Hormel Foods out here and go take a look at this stock chart. Boy, nice wide-ranging bar this morning. Headed into a swing point. Looks like a consolidation pattern to me. How about to you? And we can go identify that consolidation level, because right now it's trading into its swing point from June 20th. Only 1.1 million shares there, and this morning already up with 191,000. So it's going to have the volume to take that area out. If we take a look at just kind of the conservative range of the consolidation pattern, there would be the top and the bottom, right down yonder, right about here. So you're looking at between 45 and 49. Let's call it 45 to 50. So you're looking at a 5-point move. So any move above 50, well, any move above that swing point from June 20th, you can add about $5 to it. That is at, $49.87. So we'll call that 50. So $55 would be in the cards for Hormel Foods out here. Let me pull this back. Actually, looks pretty good. Let me take a look at a weekly chart for Hormel out here. I don't know what else Hormel sells out there. And actually, it's been, I can't tell you when the last time I actually opened up a can of Hormel chili out there, but it was in my younger years, and nothing like I grew up in Detroit. And they have Coney Islands unlike anywhere else. This is a great place for Coney Island hot dogs. Hey, this stock chart looks pretty good. Take a look at that. Take a look at a real break here. Inside Hormel was back in December 2012. 7 million shares to the upside, wide-ranging bar, breaking out. I don't know. Let me take this back. Was this consolidating back then? Yeah, a bit of a, yeah. I'd say it was. I would say it was consolidating back in the time period all the way up until that trading week of December 31st, 2012 out there, and then it was truly to the upside and has not looked back really since. Let's take a look at what else is moving out here. You've got. Synopsys Inc. SNPS up 3%, up $1.40. iDream Sky Tech DSKY up 8% this morning, up $1.64. I don't know what they do, but let's go check it out. It looks like this is an IPO, but this looks like a pretty decent one out here as iDream Sky. Let me see. Come on, show up. So this is an IPO that only goes back to August the 8th out here. Let's go see what they actually do. Give me a moment here to pull up a, where is it, the real research out here, and let's go check on it, see what these folks do. So an IPO, and this is the way you like to see an IPO come out. It is trading, it's been trading up ever since it really came out, or a couple days after it came out there. So it looks like I've got a little delay in telling me what they do. Now, with it being an IPO, no real way for us to have any kind of, we'd have to really dig down into an intraday chart to figure out where this might be headed to. So they are, this says is LinkedIn Corporation, LinkedIn. Why is iDream Sky Technologies? So let me read this here. It says, this says LinkedIn Corporation operates an online professional network company through its proprietary. Man, something's messed up here. It's giving me information about LinkedIn. So, or I'm not very good at connecting the dots out here. Nonetheless, let's take a look at what else is moving out here. You've got Kindred Biosciences, KIN. That's up 28% this morning. So that is taking a nosedive out here. Let's go see where that is headed to. Down with some volume. It had some volume in its move yesterday, but today, the big kibosh in it. Let's see where this thing is traded back to. Well, it looks like an IPO as well, and it's going to head back to the low. So in essence, it is inside this equity, Kindred Bioscience. Looks like the IPO was December 12, 2013. There is virtually very few people that are in the green on this. Only a couple of folks from that trading session of that IPO if they just simply held on to it. So not a good scene. Where's this headed to? No idea. In this case here, and I say still not enough information. It's probably headed to the low of that IPO date, which is right around $8.75 out there. You've got Wooba, 58.com. That's off about 7%. I believe that's one of the IBD equities out here, so that is gapping lower. Net income of $11 million versus 4.9. So, boy, killing the numbers there. More than 200%. increase out there. Well, not more than 200%, 100% increase, 125%. Revenues of $64 million versus $35. Man, oh man, did I talk about being able to kill numbers out here? So they must be guiding something that doesn't look too good out here. Let's see what this thing's got. Pretty decent support. So this is coming back into the last area where it broke out from. Now it does have. This looks like a little bit of a. No, this is a move off of the bottom back here on March the 28th. So it's trading below its market profiles out here. But let's go take a look at. Let me turn off a couple of tools on here. Let's try to get a feel for where this may be headed to. Let's turn off this and this. Okay. So now as we take a look at a little bit of a cleaner chart for WUBA. First, let's come back and take a look at its most recent breakout. And most recent breakout, that took place right here, the trading session of June 26, 2014. Now, the low out there is about $44.47 out there. You can really use as the breakout the prior candle in this case here, because 2 candles before was a swing point. You know, that is the area where WUBA ought to find some support. Now, volume on those breakout sessions, 4 million, 7 million shares. Today, so far, it's back with 1.8 million. So it's coming into there with some pretty good volume. Let me pull this back a little bit further. Let's take a look at a couple other high volume days and get a feel for what we have inside WUBA. See, this trading session right here on March 28th, it looks like it's volume at the lows, but it wasn't. The trading session before that on March 27th was when it made a low with 2.4 million shares, and then we had volume off of the lows out there. And so that level here, I'm going to put another line, another horizontal line across my chart. That's a really good level of support. Take a look at how you had a volume off of the bottom here. Price came back, tested the breakout area. It did it on April the 7th. That was 1.7 million shares going against 7.1. Same thing taking place out here on May 7th. You had 2 million shares going against that high volume bar out here. So what does this really set up? Well, it sets up your buy areas inside of this equity. Now, this has really been consolidating here. If we're going to draw the lines of consolidation out here, this thing has been consolidating in essence between, well, you got 57.76, a breakout above that, and then it's off to the races for WUBA. But maybe what this will do here, if it can break through the 43.01, your buy setup on this volume, you know, assuming that you don't see something crazy take place in volume, is really in that 36.86 type range. But first, it's got to break through 44.47 and 43.01 out there. So that's how I would take a look at WUBA. If you're in the trade, those are the numbers that you have to be paying attention to. If you're not in the trade, those are the numbers that you want to pay attention to and being able to buy if the markets, as we were taking a look at the longer term projections for the markets, assuming that there's nothing that gets in the way of that, then what you want to do is you want to start taking a look at things that might be pulling back into breakout areas out here. And WUBA certainly fits that. If we take a look at other things that are pulling back here this morning, percentage-wise, looks like the big one out here is Kirkland's. KIRK is the ticker symbol. Now, is this the Kirkland's that's a part of Costco out there? I don't know if that's if it is or it isn't. So let's go. We'll try and find out here as we take a look at Kirkland's. But right now, Kirkland's was out with. Let me do this. There we go. Out with numbers. They had net sales of $103 million versus $97 million from the prior second quarter. Let me see. What is there? This says a home furnishing retail. So now that's not the Costco Kirkland's, but Kirkland's operates specialty retail and home decor and gifts in the United States. I can't say that I have seen a Kirkland's store out here. Nonetheless, let's go see what's going on stock-wise out here. Kirkland's been in its own version of a consolidation as well, the top of which is right in the $20 range, the bottom of the consolidation being in the 15, so it's got about a $5 consolidation pattern. This had a breakout session, so this thing did break out, came back and tested it. Let's go test out the volume. So you had nice wide price spread, accelerated volume. That took place on the trading session here of May 22nd, 2014, 359,000 shares. So that's a breakout. So not the most liquid of equities out here. Price did come back and retested that level. That was quite a wild day out here. No idea what was behind that news event or something, but on June 30th, this thing, had one heck of a wide-ranging day. I mean, this went from a high of 1886 down to a low of 1564. For this equity, that is some wide range out there. Nonetheless, it's pulling back this morning. Volume on this is 174,000 shares. Remember, the breakout had 359,000. So what we know about this equity, it's pulling back with too much volume. Hasn't gotten down to that breakout area, which is 1671, but at least ought to go back and test that area. Let me try to pull this back a little bit further out here, see what else we might be looking at. And if this thing breaks below that wacky trading session from June 30th, that would be bad news, because that would say that this thing would come all the way back into the time period of March 26th, March 27th. Come on, what is it? March 27th, 787,000 shares down at about the $10.80 area out here. So that's what's going on with Kirkland. Captain Kirk, K-I-R-K, is the ticker symbol. Now let's go back. Let's take a look at Chipotle out here, CMG. Let's go see what Chipotle is doing. Let me do this out here. Let me turn on a couple of the tools now. We'll turn on our TASBAR boxes. We'll turn on our ABCD tool. We'll turn on our moving averages out there. And looks like I deleted something. Son of a gun. Oh, well, such as life, I can always add things back in. So let's take a look at Chipotle out here, gapping up this morning. I didn't see any news. It's sold off since it has gapped up, but it's up above. As long as it holds its market profile high out here, that would be good. As I mentioned, no three-gap play. There was a big gap out here on the trading session of July 22nd. That was after they came out with earnings the evening before or the morning of, and that was wide price spread and accelerated volume. That has not been tested out there. You know, ideally, you'd see a test of that low, which is at 649.27, price does not have to get back down to the bottom of that gap out there. That is wide price spread and accelerated volume to the upside inside of Chipotle. If we take a look at expansions, just to kind of get a feel for the expansion inside of this equity, if we come all the way back into the March 21st, 2014 level, down to the low here on April the 28th out here, what we're going to see is prices above the 1.272 expansion. That says that the price, especially with today's action, not the mere fact that it's sold off, but simply looks like it wants to get up to about 715.90. That would be Chipotle's next move to the upside out here. Let's take a look at what else can we look at out here. You know what I'm going to do is I'm going to go back, and we only took a look at we started taking a look at the composite on the monthly, took a look at the New York Stock Exchange. Let's go take a look at the S&P 500. Let's get a feel for what the S&P 500 is doing on the longer term, meaning the monthly and the weekly chart. So we know about the S&P 500, a 16-year consolidation range that it had been traveling in. That takes us back into the time period of January of 1997. Broke out of that consolidation range, which was a 800-point consolidation range. It broke out of that level on the trading session in March of 2013. Now, the top of the consolidation box, very simply, we're going to use that swing point from 2007, October 2007, the high out there, 1576. You add the 800 points, that's going to give you your 2,350-ish range out there. As a price projection, you trade at 1989 as we speak right now. So that's what's going on there. Let's go take a look at inside of the S&P 500. Unlike the Dow, unlike the New York Stock Exchange, which in the month of July, it formed bearish reversal signals as it was forming that price relative strength divergent pattern, the S&P 500 never gave us a reversal signal. And even if it was, it's been taken out. It's vaporized. It's gone. It's sayonara, baby. And now if we take a look at the A to B equals CD, off of the lows from 2009 up to the B point, which is going to take us into May of 2011, down to that C point out here. You can see it's already made the 1.7. 1 to 1.618, 2213. Next stop.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow's up 47, S&P's up 4. Russell 2000 still struggling a bit here, off $2 right now, trading out at 11.55. If I take a look up in the skies on Monday, we had a Venus conjunct Jupiter aspect, and that typically impacts gold out here. And in this case here, we've seen gold. If we go back to gold at this stage, here is the daily basis. Here's the weeklies rising price channel out here. So we're watching to see if that level gets pierced at all. If I take a look at what else is going on, coming up in the skies here, from this point forward on Monday evening, you've got the 2618 planets. They have a date Monday night. Looks like actually Monday morning at let's see, 4 hours. That would be 5:39 in the morning when Venus is trine Uranus out there. Of course, you always have to be careful how you pronounce that. And what else do we have? Over the weekend, looks like we've got a new moon that is coming in. Let's see, we've got apogee. That begins Sunday at 2:12 a.m. in the morning. And then we've got a new moon. That is when the moon is furthest from us. And then on Monday, we've got a new moon that comes in right at about 12:14 in the afternoon out there. And those are the things that are going on in the skies. We looked at the New York Stock Exchange. We looked at the S&P 500. Let's go check in on the Russell 2000 on its monthly chart out here. The Russell 2000 is really the only weak area out here with regard to not having completely reversed its reversal signal out here as we pull this back. We take a look at the Russell 2000. This candle right here from last month. Come on, don't do this to me. Right here. This is a nice little key reversal session. Remember, we opened the show during the second segment. We were looking at the New York Stock Exchange. And what I pointed out was that it had formed a key reversal session last month. Well, the Russell 2000 has also done the same. And on a monthly basis, they're hard to do. You don't find it very often. When you see that taking place, especially here where price was moving up, on less relative strength, it is something to pay attention to. Now, what we can see is this was also a bearish engulfing candle. Now, that has lost its luster, and so long as the Russell 2000 today or this month here closes above 1136.40, you have to question. There's been no follow through on that candle session, but nonetheless, it still is a pattern that is out there. The Russell 2000 is the weak link, but however, it's broken through its consolidation pattern. It has a price projection of 1350 out here, and it would seem more likely than not that 1350 is really what is on its cards. It's really what it's in store for it as its next move up there. So you got the S&P 2350, you've got the Russell 2000 at the 1350. You've got the NASDAQ Composite trading inside its 2000 swing point out there. So all of that, folks, all of that suggests higher price, until we see something else. And we must remember, or we should remember this, as we come back and let's just take a look at the we put this out here, the index daily chart out here. We'll put this on the screen. If we really take a look at last month, and let's just take a look at the Dow specifically here. It was one trading session that really blew it for the month of July, and that was this trading session right here, July 31st. Well, you're up above that. Inside the Dow, hey, look, you're already above the 0.786 retracement. The Dow is going to go test 17,151. As you may remember, the pattern that was out there inside of the Dow was a 3 drive to a top pattern that looked like that. And that's a perfect 3 drive to a top pattern. It had the perfect candle configuration. It had everything. Did it work? Yeah, it worked out there. But it looks like that area, it should have worked even more if that was going to be the ultimate of tops out there. It doesn't look like that is the case. Hey, folks, it is Terrific Thursday. Thanks so much for joining us here. If you're off to start your day, have a great day. I look forward to seeing you tomorrow morning. Otherwise, stay tuned. The Money Master show is up next, and I'll be with you for another hour. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.